training series with the Mortgage Calculator. Today, we're going to talk about manufactured homes. So, we will do a deep dive into that here today for our training. Before we do that, we'll wait just a couple of minutes here to let everybody jump on and we can go live on all the different platforms. We did put the chat up on the screen, so feel free to drop a comment there in the chat as you tune in. Hope everybody had a great day. Remember, we do this every Tuesday and Wednesday evening at 7 p.m. Eastern Time. So we'll have a new topic tomorrow that we'll be going through. I'd appreciate everybody tuning in nice and early. Thank you for the comments. Annette, John, Jason, appreciate that. Feel free to keep dropping comments as you tune in, everyone. All right, Owen, thank you for the comment. So it looks like we are ready to go. We will keep the chat going there. We're going to take it off the screen, but please feel free to keep dropping comments there in the chat, and also drop any questions that you have as we go through the training. We'd be more than happy to answer any questions. With that being said, let's get into it. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. This is our loan officer training series that we do every Tuesday and Wednesday night at 7 p.m. Eastern Time. Today's topic for our loan officer training series is going to be manufactured homes. So our sales manager, Jose Gonzalez, with 28 years of experience as a loan officer and a realtor, is going to go ahead and break this down. Now, if you have any questions, feel free to ask them there in the chat. So with no further ado, Jose, let's go ahead and talk about manufactured homes.
All right. Good evening, everybody. Thank you for joining us for tonight's training on one of the hottest property trends in the affordable market, manufactured homes. Very important phrase there, because affordability seems to be something that is lacking in many of the real estate markets throughout the U.S. And we are seeing an uptick in manufactured home financing. I can tell you in the last 2 weeks for the team, probably disclosed 15-20% of the loans have been manufactured home loans, some primary.
We just closed one today too.
Yeah, right. Very popular in some markets out there, like some areas of Florida, full of manufactured homes, full of options for manufactured homes, very affordable when you compare them to their stick-built homes, which is what they refer to a traditionally constructed home, be it concrete block and stucco, which is not actually stick-built, but whether it be concrete block and stucco or frame and stucco or frame and siding, those are referred to as stick-built or site-built homes. As compared to a manufactured home, which you will understand the difference of the two, or the difference between the two, when I get into some of these specifics. Now, what I will want to state is that the purpose of this presentation is more to enlighten you about the context of originating manufactured homes, not so much all of the specifics of the guidelines of FHA, VA, USDA, non-QM, although we are going to discuss some of the differences there, but it's more on just enlightening the MLOs and our borrowers out there on the intricacies where a manufactured home loan is radically different than a site or stick-built home. In the way that it's appraised, in the way that you have to verify certain information, and in the data that has to be disclosed at application. All very important points to keep everybody's file in compliance and lead to a happy closing. So with that being said, let's jump right into it. Now I have that photo there of the manufactured home, so you could see that is a manufactured home in transition from being I guess you'd call it a mobile home or a trailer, which is what they are when they start their life. They're manufactured. That's why it's the term manufactured home. They are, let's say, constructed or built in a factory. If it's a double wide, it's going to be two pieces. It's going to be transported to its final resting point in two pieces. It's going to be assembled at the site, put together, permanently affixed via a foundation to the land that is titled to it, and then it transitions from a trailer to real estate, right? So, but what exactly would we consider a manufactured home? Is a factory built dwelling unit built after, very important dates here, built after June 15th, 1976. And notice how they have in the definition on a permanent chassis, because at some point in their life they did have wheels. That's how they move them around, on a permanent chassis and attached to a permanent foundation system. Now, very important to note, this is an item that gets many people cause their loans to be delayed because they don't realize that an affidavit of affixture is required to document that the structure is now permanently attached to the land and that it has transitioned from being a trailer, from being a trailer to a vehicle with a vehicle title to real property with a folio number and a deed, right? Once it becomes real property, you can do a property record search and there's going to be your manufactured home. It'll probably state in the construction type that it is a manufactured home, but it will have a folio number, does have the land that is associated with it, just like the land is associated with the single family home structure, and it is real property. Now, manufactured homes can be single wide or double wide. Typically, the double wide ones are the preferred ones. Single wide are much more restrictive in the financing, and in many cases will not be possible due to overlays imposed by the investor or lender, right? Fannie Mae and Freddie and FHA do allow single wide manufactured homes. Matter of fact, on the Fannie guidelines, it states they can be as small in size as 400 square feet living area and 12 feet wide. But in most of the guidelines, you're going to see a whole different type, a whole different array of overlays, where most will require the homes to be double wide. That doesn't mean single wide is not possible. What that does mean is read the guidelines very clearly for where you're looking to submit the loan to make sure what the size restriction is with that option that you're considering. Very important to note that manufactured homes built prior to June 15th of 1976 are not eligible for standard financing. You may be able to get some type of, chattel financing or something like that for them, similar as you would for a car, but you're not going to be able to get any agency loan nor any non-QM loan, which would be your standard real estate loans for any manufactured home built prior to June 15, 1976. So what are some of the specifics that are, to a manufactured home? Well, it is very important to note that the appraisal is completed on a 1004C as in Charlie form. We recently had one where the underwriter messed up on the approval, or maybe just used the standard stuff that filled in on the appraisal and put a 1004, and we had a processor order the 1004, and then we had to order a 1004C. Our MLO caught it and said, hey, hold up a second, that's the wrong report, because they had gone to the trainings and knew that it was a 1004C. So we were able to save that appraisal, but note it is not a standard 1004 because it does have language specific in the appraisal to a manufactured home. I had stated about the minimum square feet, 400 square feet gross living area for Fannie. But again, like I stated, look out for overlays. Now, this is a very important point. FHA, USDA, and VA do require a structural engineer's report on all manufactured homes, right? Fannie and Freddie only require this report if the property inspections or the appraisal uncover an issue. Normally, you don't share the property inspection with the underwriter, so it's pretty much only going to be the appraisal from an underwriting point of view, or the inspections if the buyer is concerned and wants to order the report of their own accord, that by all means. But as far as underwriting requirement, it's only going to be required if the appraisal report points out some kind of shortcoming in the condition, in which point the underwriter will probably condition for this report. Now, this report does cost at least $600. So if, for example, you're disclosing FHA, USDA, or VA file, you need to include a structural engineer's report in there because it's a requirement. The buyer does not have a choice whether they want to have that report or not. The affidavit of affixture is required to show the date that the manufactured home was permanently installed in its current location. This is very important because a manufactured home cannot be moved from its originally installed location, or else it will not be eligible for standard financing. So we've had this situation come up every now and then, right? Somebody purchasing a manufactured home, but they're purchasing a home that was moved from where it was originally installed. That's a no-go. That's not going to work.
How much are those reports? They have to disclose those, correct, Jose?
The affidavit of affixture is obtained by the title company. It's a recorded document. It should be part of the title work because it was part of the documentation that was necessary to transition the manufactured home to real property from a trailer. So the title company can usually do their record search and can provide it. You just have to let them know ahead of time that you're going to need it. Now, most title agents that are more adept at dealing with manufactured homes are going to know it and will provide it to you with the title work.
Do they charge an extra fee though on title for that at all, or it's included?
No,
in their
it's included as part of part of their normal title examination. Because if the affidavit of affixture is not readily available, cannot be located, that's a problem with your title. Because how could you have real property if you can't show the day that it was permanently affixed to the land, which is the day that it was born,
became
as a manufactured home? Yeah, exactly. That's like a really critical date. You will have underwriters condition you for that document if it is not presented to them along with the title work. Homes built from 1990 and after qualify for the conventional manufactured home advantage program with lower rates than standard conventional options. You're typically going to see at least a 1-point betterment in the cost of the rate if you have a manufactured home advantage eligible property. So very important when you are looking to pre-approve, let's say, a refi in a manufactured home or just a purchase, that you provide the manufactured home advantage quote and the non-manufactured home advantage quote, and let the prospect know what the difference is so that they themselves will be empowered to then tell their real estate professional, what they want, and so that they're aware if the home is built from June 15th, 1976 to December 31st, 1989, it's going to be a higher cost on the rate than if it's 1990 and onward. Now, this is for conventional loans. FHA does not draw the line at 1990, but they do draw the line at June 15 of 1976. And by that, I mean FHA, USDA, and VA. But then again, that's why they're also a little bit more restrictive in requiring the structural engineer's report on all their loans versus a conventional, which makes it optional only if warranted by the appraisal. The only option for an investment property manufactured home loan is through non-QM, as agency is only primary and second home, and USDA, VA, and FHA is primary only on those. And cash outs are restricted. You can do cash out refinances, but they're going to be lower LTV and lower terms also. So when you are looking to quote those those manufactured home loans, be on the lookout, play around with your LTVs and your amortization so that you can get proper quotes. Now, now that's not actually a HUD decal plate. I wasn't able to find one, but that's what they look like. They're red and they're usually all beat up like that and pretty illegible, right? So it's really important to note that the HUD decal plates and data plates are certification labels issued by HUD, which show that the property meets federal construction standards or HUD federal construction standards, right? So really important to know that if it doesn't have it, if it never had it, you can't finance it with any of these standard programs, whether it be agency or non-QM that we're talking about today. Now there's two items to consider. One is the HUD decal plate, and the other one is the HUD data plate. Now the decal plate, there's two of them, one on each end of the structure, so one on each half, let's say, and in the corners. The issue with these HUD plates is that they usually tend to be missing either due to repairs that have been completed to the exterior of the property, or they've been painted over, worn out, damaged somehow. The appraiser can't find them. The issue is also with the HUD data plate that is located inside the unit somewhere, which also needs to be photographed by the appraiser, and which many times are long gone because they usually tend to place them inside a cabinet or something like that. Maybe the cabinets were remodeled, some interior remodeling occurred. The contractor removed the piece of the wall that had the plate, and the plate got discarded, never got replaced. Well, those plates need to be photographed by the appraiser. So you have to be aware, if you get your appraisal report back and you're looking through the photos and you cannot find the data plate or the decal, or they're there because the appraiser said, okay, here they are, but they're not legible, then you are required, if you want to close this loan, you need to verify the information. And that is done through verification letters obtained from ibts.org. That's a company that just specializes in these verification letters. To order it, you need the serial number of the manufactured home. It has a serial number the same way that a car has a serial number. You place your order, you provide the serial number, and within a couple of days, if the information provided obviously was correct, you will be provided the verification letter that verifies the decal plate information. They'll even send you a photo of it and verifies the data plate information. Now, there is a cost for those letters, anywhere from $150 to $250 for each letter. One letter for the decal plates. One letter will cover both plates, decal plates, and one letter for the data plates. The 250 cost is more for a rush, so I would probably disclose 250 for your cost for each letter, because this is could be. I mean, you do have to verify the plates. That's a requirement. If the plates aren't verified, you need to verify it with a letter. So that's pretty much going to be a requirement. So you have to include that in your initial disclosure and whatever fee estimates you give to the customer, so they're aware. And you need to let them know too, especially if it's a refi and they live there. Maybe they can start hunting it down and they can clean it up a little for you, so that when the appraiser goes out there, they can tell the appraiser, yep, here's the decal plates here. Here's number one. Here's number two. I found the data plate. Help them help themselves, and save a little money in the end, because your loan will not close if the decal and data plate information cannot be verified. And again, you will need the serial number of the home. Now, let me give you a couple of the nuances between the different agencies and conduits that we have for the loans, right? On our conventional options, Fannie Mae, Freddie Mac, as you know, the minimum credit score on that will be set by automated underwriting. Now, this is a really important point, because a manufactured home adds an additional layer of risk to the file, as far as the algorithm that analyzes the loan, the automated underwriting algorithm. I'm pretty sure the programmers for manufactured homes put a higher risk classification than for a site or stick built home, because we've had it in the past. Same borrower, site built home, same loan amount, same everything, you get your approval. Now all of a sudden, change that to a manufactured home, and you don't get your approval. And the worst part is when they start first trying to approve the borrower for a manufactured home, and they're struggling forever, can't figure it out. And most of the time, all they got to do is switch the property type to stick or site built, and you may get your approved eligible, at which point uh, you'd have to let your borrower know what's the deal. Maybe a little easier on the FHA side then to get the approval for the manufactured home, but then again, you're going to have additional expenses associated with the loan and additional risks. If the foundation is not good, then that deal is going to be dead. Especially if it's a refi, that would be terrible, right? Because they're not buying it, they're living in it. So DU will set the minimum credit score. As I stated previously, even though the agencies, Fannie and Freddie, do allow single wide, really small in size, the reality of the situation is that most investor overlays will require the manufactured home to be a double wide. Okay. Condo and co-op projects are ineligible, even if they're like a detached condo project. Like sometimes you have a community, right? And they are detached condos of manufactured homes. They're not eligible. Too much risk. The manufactured home type property risk combined with the condo association risk just throws the risk meter off the charts. They don't want to do it. Uh, Manufactured homes are not eligible for Fannie Mae home style renovation, but they are eligible for Freddie Home Possible. So there you go. Like I like to say in the trainings, Fannie and Freddie, just because they're conventional, they're not exact. Just had an MLO today. I disclosed the file. Happened to be a manufactured home loan, by the way. Didn't get approved Fannie, got approved Freddie. 5% down, 764 credit score. Amazing borrower. So I'm seeing here that looks like Freddie may be a little bit more lenient for manufactured homes, because you see right there, Freddie permits an ADU on a manufactured home. The only catch is that the ADU cannot be in manufactured homes. The ADU has to be stick built. So you could have a separate little detached cottage or something like that in your manufactured home property. ADU, Freddie will allow it, Fannie will not. I already mentioned manufactured home advantage with the lower rates. And important to note, cash out is for primary only and reduced LTV and term. Second home is rate and term refi only. Cash out not possible. FHA, USDA, and VA options, right? Most of the points that I mentioned for the conventional loan are going to be similar. FHA, USDA, and VA options are going to be better because this is government subsidized. Government does realize the need for housing and especially affordable housing, so they do relax their guidelines a little bit compared to agency, compared to Freddie and Fannie on these. So their LTVs are not affected for the purchases. So obviously it's your best option from an LTV point of view, but then again, they are going to be stricter on the vetting of the property because they will require that structural engineer's report, and it is for primary homes only. So this is a nice option there. And here's a nice mind blower here regarding non-QM now. We know that our investors love manufactured homes because they have a very good rate of return on the rent, right? Compared to the cost. Most renters are just looking for the space. They want 2 bedrooms, they want 3 bedrooms, they want 4 bedrooms, 2 bathrooms in a certain area. They're not really going to be so overly picky whether it's site built or whether it's manufactured home, as long as it's good condition and the area, right? That's what renters look for. The investors know it. So especially on, for example, the DSCRs, right? You're going to have an amazing debt service coverage ratio on the manufactured home. And we at the Mortgage Calculator do have DSCR manufactured home options. 70% max LTV for your purchase, 65% max LTV for your cash out refinance. So the only option that you're going to get for an investment loan on a manufactured home is going to be non-QM. But the same as with the agency and FHA, the HUD decal and data plates do need to be verified. You do need to disclose those IBTS.org data plate verification letter and decal plate verification letter. And the structural engineer's report is only going to be requested if the appraisal shows issues with the foundation of the property. So great options here for your investors, as well as for second home and primary and conventional and primary in FHA, USDA, and VA for everyone out there to increase their lending footprint. This is the choice for people looking for more affordable housing. So we definitely look forward to assisting borrowers out there with their manufactured homes loans, and our team structure as many of these loans as possible. We've given you some good pointers here to look at when structuring your deal and when structuring all your quotes, right? So be on the lookout for all those pointers that we made here.
Got a question here from Miguel. I think he was asking when you were talking about switching, when you were getting denied on the DU and your customer couldn't get a manufactured home even though they were shopping for one. So that's kind of the opposite of this training, right? Is sometimes they don't qualify and you can't get a manufactured home, I think was the point you were making, correct?
Yeah. The point is to note that a manufactured home does add an additional layer of risk to the transaction. So sometimes when people are stuck trying to figure out why this borrower that looks to be like a perfect borrower is not getting approved, they should look at and see if it's a manufactured home, switch the property type to a site built home instead of manufactured home, and see if they get the approved eligible that way, so they can at least report that information to the borrower.
And I think the other point would be is if you pre-qualify someone for a site-built home, obviously that letter is null and void if they send you back a contract for a manufactured home, and then you rerun that DU, and they're going to probably, not probably, but could get denied. So that would be the thing to watch out for. It's not the same, right? So just watch out for the differences there.
That's a great point.
All right, and then Malik asking, Jose, what about the new tiny houses? Could you go over the difference with those, or are those the same?
Yeah, the issue with the tiny homes is that they are mobile. So let's back up a second here and talk about nomenclature, right? Mobile homes is a term that a lot of people use when they really mean a manufactured home. But a mobile home is basically a manufactured home that has not transitioned in its life to becoming a piece of real property, because it is not permanently affixed to the land, not just via a foundation, but also with an affidavit of affixture. So that would be the issue, is that the tiny home, you would have to make sure that it is permanently attached to the land the same way as a site-built home or manufactured home. Then the only issue you would have would be the size. Is it going to meet the characteristics of minimum size and minimum amenities of the property, like full kitchen and all those things that real property needs to have? When you are reviewing your guidelines and looking for eligible properties versus ineligible properties, I really haven't seen tiny homes as a designation yet in guidelines the way that you see manufactured homes. But you can usually look at the guidelines and just look at the minimum square feet requirements and the other characteristics that they require of the home to see if your specific tiny home will qualify or not. Because just because it's small doesn't mean it's not going to qualify, because most of these guidelines, I think, call for, like, I don't know if it's 500 square feet, possibly minimum. And I believe that some tiny homes out there are at least 500 square feet. So that's just something where you have to look at what is the requirement, because again, a tiny home is not a manufactured home. Two totally different things.
And you got to remember, they would have to maintain the HUD data plate manufacturing requirements. So not a lot of these tiny homes that you see on, Facebook or, coming across TikTok of people that built their own are built by a manufacturer that follows the HUD data plate requirements and all of the stuff that, manufacturers that have been doing it since 1976 have been following. So now if you get one of those traditional manufacturers who makes what you are considering a tiny home, which is maybe more of a trendy design of a manufactured home, then maybe that's what you consider a tiny home, would be no problem, right? Because it's just a manufactured home that just maybe looks cooler or more trendy. So very vague definition of tiny home, because I don't even think that is really a definition, right, Jose? That's kind of just a trend word with just kind of a pop culture thing, right? There's not really a legal definition for us as loan officers for tiny home. That's what Jose was mentioning there. It's not manufactured, it's not stick built necessarily, unless it is one or the other. It is manufactured if it's built by a manufacturer that follows all the HUD and all the other guidelines. And it is stick built if it was stick built based on the city, county, state, all those guidelines. But if it's not 400 square feet or greater, it's not going to meet our guidelines, right? So,
and if it has wheels still on it, definitely not going to meet the guidelines.
Yes.
Okay, so it's funny because John said there in the chat that to be considered a tiny home, the max size is 400 square feet, and to be financed, most of the max is it's over 400 square feet. So that kind of answers the conundrum right there, you know.
Yeah. Yeah, I think there's not really a technical definition, but John's probably looking at something online that's where someone is defining it as. Yeah, so it's something that's undefined is almost the definition, right?
So I got a question. So Jose, let's say I have what I think is a manufactured home. Let's say it is on the ground, but it's in a RV park, right? So I don't own the RV park, but I own this home and attached to the ground. Is that a manufactured home that I can finance?
If you don't own the land that it sits on, and it is not associated to that piece, to that parcel with the affidavit of a fixture, then you will not be able to finance that. That would basically be a mobile home, or more commonly known as a trailer. Basically,
Right.
Their trailer park.
We get that question a lot. A lot of people that own, essentially, like you said, most people would, we refer to it as a trailer, right? In a trailer park, a trailer, but they might think it's a manufactured home because it's on the ground or doesn't have wheels anymore, or whatever they be, but it doesn't have any land, right? The land is the biggest thing. Has to have land to be property, right?
Yes, sir. The other thing to note, when don't be thrown off by if whoever you're speaking to is referring to it as a mobile home. Don't immediately assume, oops, all right, it doesn't qualify, because most people are incorrectly using that phrase, and what they actually have is a manufactured home. What you got to find out is, just like the point you were just making right now, Kyle, is where does this sit? Is it in a community, or is it an individually deeded lot that's yours? Then that's a totally different story. Then it's just that the customer was just used to using the phrase mobile home when what they actually have is a manufactured home. Because I get that all the time, even from MLOs asking, oh, for a mobile home, can we do this, or do we do mobile home loans? And then we have to okay, what property type are you actually dealing with? Is this actually a mobile home, or are you just using the phrase mobile home, but it's actually a manufactured home? And then once we do a little research, or they provide the address, then we can look the address for the property if one is provided, and then confirm that it is real property with a folio number.
Or vice versa, right? It's usually the client saying it's a manufactured home when it's actually a mobile home, and vice versa. Yeah. And it's John says, I sold manufactured and tiny homes. All right, so John knows what he's talking about there for the maximum square footage. So I think there's not any more questions here. Yep, I don't see any more questions. So I think we can go ahead and wrap it up here. Remember, we do this at 7 p.m. Eastern time every Tuesday and Wednesday with a different topic. So we'll be right back here tomorrow with a new topic to talk about. Thank everybody for tuning in. Thank you, Nick. Thank you, Jose. We'll see you tomorrow, 7 p.m. Eastern time, for the next episode of the Loan Officer Training Series with the Mortgage Calculator. Have a great night, everyone.
Thank you, everybody.